There are, from a fundamental point of view, a couple reasons to be interested in silver and silver stocks. But you have to be, I would suggest, first of all, a speculator. And you have to be, I would suggest, a contrarian. The easy money will be made in silver and the silver stocks. I'm interested in silver because it's unpopular, it's out of favor, and it's regarded as dead in the water. Buying things when they're hated and enjoying the arbitrage from hated to unhated is the easiest money that's made in speculative markets.
In today's episode, Rick Rule talks about his insights and experiences in the world of commodities. In this video, Rick explains the main reasons for you to own silver and the key catalysts you should be on top to come out winning on the upcoming bull run in the precious metals sector. In the continuation of the video, Rick Rule talks about how he fell in love with silver after a massive trade back in the day. Like, subscribe, and turn on the notifications bell to let us know that you like the video, and check our pinned comment for some massive sign-up bonuses.
Silver is the most volatile, I would suggest, of the precious metals. I'm defining the precious metals to be gold, silver, platinum, and palladium. Silver traditionally is a second-half mover, meaning in precious metals bull markets, the markets are generally led by gold. Once the trend is established and the narrative is established, silver, for whatever reason, and I'm not sure of the reason, perhaps the lower unit cost, moves further and moves faster than gold. My first attraction to silver, of course, came in the decade of the 1970s. The cause for that attention was the fact that the silver price moved from, if my memory serves me well, $1.20 to $50. Which was certainly a dramatic move. I'm not trying to say that I caught the bottom or that I caught the top, but I caught enough of the middle that it attracted my attention and has for the rest of my life. And as dramatic as the moves in silver are, the moves in the silver stocks, possibly because the population of them is so few, is even more extravagant. During that period, the 1970s, one silver stock, Coeur d'Alene Mines, moved from 10 cents to $65. Alas, sadly, without me. But that's okay. That there are, from a fundamental point of view, a couple reasons to be interested in silver and silver stocks. But you have to be, I would suggest, first of all, a speculator. And you have to be, I would suggest, a contrarian. The easy money will be made in silver and the silver stocks simply from the arbitrage between hated and disgusted and unhated, just as we saw in the uranium stocks. The easy money in the uranium juniors happened as a consequence of them becoming simply less hated, and that will happen with silver.
Now, Rick explains the intricacies of the silver market and the best ways to be positioned for the upcoming bull run.
Silver is unique, I think, in ways that your listeners need to understand when they're trying to comprehend silver. First of all, most silver doesn't come out of silver mines. So the supply side is a really interesting conundrum. Of new mine supply, last year, I believe 18% of the new mine supply of silver came from silver mines. The rest came from copper mines, gold mines, and lead and zinc mines. So trying to forecast mine production based on the silver price is a fool's errand, because gold prices and copper prices and lead prices and zinc prices are more important to silver production than silver prices are. And equating mining costs around primary producers is an illusion too, because those costs only pertain to 18% of mined production. Most silver, as a consequence of it being a byproduct or a co-product, requires, from a mining standpoint, only the processing of the silver stream. The costs are paid for by other metals. So the primary cost of production of silver is often less than people think it is. And as the price of silver rises, the supply rises for two reasons that most people don't consider. The first is recycling. At low silver prices, it is less efficient to recycle. At higher silver prices, it's more efficient to recycle. And the easiest silver to grab is the silver that's already been mined, that is recycled as a consequence of industrial utilization. The second is that the above ground stockpiles of silver are large and almost unknowably large. Silver still represents a store of value, if you will, off official balance sheets, particularly in South Asia, in India, Bangladesh, Pakistan, Sri Lanka. And what you'll find is that when the silver price moves up in US dollar terms, particularly when the US dollar moves up relative to South Asian currencies, that South Asian people tend to dishoard their silver, which is to say they tend to be better silver investors than Americans. They tend to buy it low and sell it high, unlike us, who tend to buy it high and, of course, sell it low. So the supply of silver is very difficult to understand. The demand side can be similarly difficult, although it's important to note that right now, at these silver prices, there is a supply deficit, which is to say,
in 2023, industrial silver demand is poised to reach a record high of 632 million ounces, marking an 8% increase, according to a forecast by Metals Focus in collaboration with the Silver Institute. This surge is propelled by investments in photovoltaics, power grid infrastructure, 5G networks, as well as growth in consumer electronics and rising vehicle production. Industrial demand, constituting over half of the annual silver demand, is forecasted to rise by 46% over the next decade, with a rapid 56% growth projected in the electronics industry. The major consumers of industrial silver are electronics and electrical applications manufacturers, consuming 67% of the industrial offtake in 2022. Despite a 10% expected slowdown in overall silver demand in 2023 due to declining silver jewelry and silverware demand, the Silver Institute projects a substantial physical deficit of 140 million ounces, marking the third consecutive deficit. While the price of silver, currently around $23 an ounce, is considered undervalued, its future potential is underscored by the shrinking supply coupled with rising demand and the Federal Reserve's challenges in curbing inflation. This situation, alongside the historically high investment demand, presents a compelling buying opportunity for silver at the $22 to $23 range.
The amount of silver produced in all sectors, primary production, co-production, and recycling, is substantially less than global consumption for fabrication. It's important to know that. What is unknowable, at least by me, is what the above-ground inventories are and where they're available for sale. So the fact that there is a primary deficit, while it's relevant, is a very difficult thing to gauge fundamentally, because most of the supply that's ever been mined still constitutes in some way, shape, or form supply. Silver bulls, if there are any left, other perhaps than myself, should get solace from the fact that industrial utilization and application of silver is growing very rapidly. The solar industry, as an example, doesn't exist without the reflective properties of silver. All of the new solar panels that you see in Northern Europe, where the sun doesn't shine, are of course dependent on silver. But importantly, new utilizations of silver are occurring. It is fairly durable, it's fairly malleable, it's fairly conductive, and as a consequence of that, and by the way, it's cheaper than gold, of course.
What do you think of today's episode? Are you ramping up gold in your portfolio, or are you still waiting? Post in the comment section down below the percentage of precious metals in your portfolio and your exit strategy, and send this video to someone who hates copper. Thanks for watching the video to the end. Please consider subscribing to the channel as everything helps with the algorithm, and I see you next time.